if you're being reckless with your lot sizes, not using the appropriate lot size for the size of your account, you're gonna blow it instantly. I can't tell you how many accounts I've blown. I've blown multiple accounts and I lost a lot of money because I didn't have my psyche right. What's the deal, YouTube? It's your boy Q1 Mega. I am back with another analysis. Today is August the 4th, 2024. We are about 4 hours after the market started on a Sunday. And there's a few things I want to go over in this video. Of course, we go over the previous analysis that I did July 24th. We'll be talking about correct and on point the analysis was. And I'm glad to say majority of them did go my way. But it really doesn't matter. It's not about who, like whether I was right or wrong. It's about the question is, was I profitable? And did I get in at a good position when when the market was moving? Did I profit? That is the main thing. That's number one. I'll be going over whether I got in or not on those movements. And I really want to get into the power of risk management. I'll be showing my account, my live account, for example, of really getting in depth of the difference between trading and gambling, how risk management is so essential. I'm gonna show how the news impacted the market last week. Fundamental news is very important. And I'll also be predicting where the market is going this weekend, upcoming weeks to come. So let's go. Look at EU. We have ourselves a butterfly 7. I can see it moving down to the 1.075. I can see it. Yeah, this area down here. Around that area there before the trend reverses. So as you can see, it's stopped before. As you can see, it stopped before 0.075. Here is where I was pretty much predicting. Around this area here. I mean, around here. It stopped there and then shot up. And at this particular time, that's when the news was released. The unemployment rate was more than the forecast, which isn't good for the currency. The average hourly earnings was less than the forecast. The non-farm employment change was less than the forecast as well. So these three things that came out at 8:30 on Friday is what caused these long bullish candles, and it went up strong. It went up strong, right? And when it comes to news, anytime you see a red folder, that means it has a great impact on that currency. And I know when it comes to unemployment rates, inflation rates was the CPI, the presidential meetings, the FOMC press, which is the Federal Open Market Committee, like all these things taking the gross domestic product also takes big effect in the market. And in these times coming up with elections and everything, the market is going to be very unpredictable and volatile. So when it gets closer to election, it's probably not the best time to trade or get in the market because, like I said, it's very unpredictable. That's what I was taught when I first got into trading. So, and also the first week of the month isn't the best time to trade either. Because it's very volatile, unpredictable, and I probably won't get in this week actually, unless I'm scalping, trying to catch a retracement or things of that nature. Things of that nature. That's probably when I would get in. But besides that, I am going to stay out. Now, I did profit I did profit a little bit. You go back to it. Let me see the most recent USD. I mean EU. I mean $2.01. Let me see. $1.74, 5 20. So I did profit a little bit, lost a little bit too. And this is at 10 cents a pip. Besides this, 25. But I've been going 10 cents a pip. That's because I'm trying to knock the rest off. I don't want to um up my lot size and risk more if I'm not really sure. Um, if I'm not, you know what I mean? If I'm not really sure, like I said, I'm just getting back into it. And I got my confidence back. So I'm about to rise that lot size up to the appropriate lot size. And we're gonna talk about that too. I'm gonna talk about the appropriate lot size for your trading account. All right. So moving on. So around the 1.100 line up here. I can see it going beyond this. I can see it going beyond this line right here. Being that, it looks like it likes to be well, it has seen that line previously before. And that is a resistant line, you know. As you can see, it has been on beyond that price, of course, as well. But as far as now, I can see it, uh, going beyond. I can see it going. I can see it going beyond that line. So basically, we're on it to break this line here and to break this trend line here. Boom. Those two structures to break. Come down to the 152 area. Yeah, this area here. I was looking for it to break this resistant line in the trade line. Zoom in a little bit. And it did. But I was looking for that retest. You want to look for the break and you want to get in to make sure after that retest is going to come back and retest that previous resistance, turn it into a support, and then boom, it's supposed to take off. But that didn't do that. It broke the resistant line, broke the trend, came back down, and constantly kept going down. So I didn't get in that trade at all. Didn't get in that trade at all. Um, and this is where I see this is what I see the market doing previously. I mean, uh considering that the dollar index is going down, um, I can see it coming up to the what was once a support line, now a resistant line, and coming around this area here, which is the 142, coming down with the 142. Now, yeah, so with UJ in the previous analysis, I did EJ and AJ. And I'm not going to cover those two because they pretty much move the same as UJ. If you look, let me see, EJ. If you look at the correlation, it's 93% correlated with UJ. EJ is 93% correlated with UJ in the same way AJ. AJ is 96% correlated with UJ. So they pretty much move the same. So, no need to really go over that. I'm waiting on that retracement to get in. As you can see, I got my TP lines here. So I can see it going to the to at least the to at least one, to at least this first one here. Like I said, it did hit at least the TP1. So it did hit that. Was on point with that. But like I said, I wanted to uh I want to see it retrace back between the 618 and the 782. between these price lines, between the 0.92 and point 0.9, hold on, and a 0.915 between here. And more than likely, I will get in for the ride and ride it down to that TB2, which is around this price area right here, the 0.89, say 300s, and the 0.8900 between there. So yeah, I could see it coming down to the 168. See it coming down this area right here. Okay, moving on. EG. Let's go to EG. Now, zoom in a little bit. So the trend line here actually came down, broke the trend line, came back and retested this um, support line, came back and retested. And this would have been a good time to get in. I didn't get in, didn't set alarm or anything, but it was a nice confirmation to get in that. Um, like I said, I predicted it to come down this area here, and I got that based off the retracement, this move here, which was the extended 168. That's how I got that line there. But what I would like to see it do is, well, it looks like it's breaking now. Yeah, looks like it's breaking now. Come back, um, retrace, shoot up, retest, and then take off, which will be a good time to get in for the buy. And EG, good time to get in for the buy once it breaks again and retests. Or you can just get in now, but you definitely be taking a risk. If you're that confident, and I say go for it. Sometimes you got to get in. You just got to go for it. But I will wait for the retest on that way. Now, EN is something new that I haven't traded in a while. But this is the one that I've been paying the most attention to. I've been paying the most attention to EN this week, and I've been the most profitable in this trade. And let me show you why I took that position. As you can see up here, this price line where it is, but where it was, where it's headed again, is a big resistance. There's a big resistance. I mean, it hasn't been in that area, like actually above that price line since, let me see, 2010. 2010. After that, it's really been below this price line. So soon as I see it, the price up in that territory, I'm thinking, well, let's go for it. So I went for it. Let me zoom in. Went for it. I had a few positions in this one. First, I got up here, then took another couple more positions down here, right? Yeah, so I went for the ride. Uh, let me see. Like I said, I've been in EN at 1231, 968, 1986. Yeah, so I've been more profitable in that and with that currency the most. So when the news said it took a turn, and it's on its way up. Now it can do a few different things. I can see it coming back up to that price line where it was before to take that liquidity that's up there, um, and retracing back down. Um, I can see it going down now. You know what I mean? Just straight up reversing. But we'll see. I mean, I'm not taking any trades now at all. I'm just watching and seeing, what the market is going to end up doing. As of now, gold. Huh. We have ourselves in a ascending triangle. Gold is going to continue to go, 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 go. Um, I said it was going to go up based on the ascending triangle. That's a confirmation there. And another confirmation is the fact that the dollar index is going down, based on that news. When the news hit, it started going down. So I can see I can see the dollar index coming down, retracing, and then constantly hitting this trade line. Might even go beyond this trade line further down. So you best believe anytime the dollar is going down, then gold is going up, and vice versa. Always remember that. Um, gold always does the opposite of what the US dollar is doing. Okay. So the price was here at the moment in time on the 24th, and then it shot up. Looks like it's retracing now. And yep, retrace to the 50. Looks like it's going to be on his way up past this trend line here. And I will be trading gold as soon as I get the right broker. The broker I'm with only lets me trade Forex. I'll be trading gold and silver, but gold for the most part, and indices as well, which will lead me to my next chart, which is NAS 100. Now I'm going to start going in depth with NAS 100. NAS 100 is, when I first started trading, was my first indice to trade. It's much cleaner than all the other indices to me. So it was definitely my favorite. Okay. So as far as what we're looking at now, you can see the uptrend here. Looking at the day chart, looking at you can see the uptrend here. It retraced uh to the 618. Looks like it's going a little bit beyond the 618, maybe to the 682. Um, coming down, taking that liquidity. I think it's going to bounce back, might bounce back off here, right? Shoot up. And there's a gap here. Let me see. Yeah, I think it's going to come back. It's not a big gap, but I think it's going to come back up. Uh, I mean, essentially, like, that's what indices do. They constantly go up, up and up. I mean, if you didn't know that, that's what indices do. They go up. They will retrace, but they always gonna end up going back up. So that is it for my analysis as of today on a Sunday. First week of first week of the month for the market. Not the best time to start trading, not the best time to take any positions, because the market is very volatile and unpredictable. So keep that in mind if you are wondering. Okay. So now I want to get in depth about risk management. So let's go to my account. So since May 26th, that's when I start trading again this year, which is here. Okay. And this right here was last year, 2023, June 15th. And here I was clearly over leveraging. Um, well, you can't really tell, but at the time I had 200 in my account and I'm doing 40 cents per pip. And I'm gonna get into that right after I explain this, right? So since May 26th, I took a total of 24 trades. I added my wins and subtracted my losses. And I profited $40.07. Now, I won 13 trades and I lost 11 trades. So I have a winning percentage of 54 percentage. Now, if I lost 10 and won 5 or 6, I can still be profitable because it's all about risk management, which I want to get into here. You want to have a decent amount of space between your entry and your stop loss. So if I'm only risking $10 per trade, $10 per trade, and let's say I got a lot size 0.01. So that's 100 pips that I have space before it hits my stop loss. So for example, in all these four examples or these four lot sizes, I'm risking $10 per pip. So the bigger the lot size, the less pips that you have to work with. The bigger the size, the less pips that you have to work with. So here we got 75 pips before it actually hits the lot size. And to remind you, this is the 3-to-1 ratio. We took a total of 6 trades. You lost 4, but you won 2 of them, and you still profited $2 with a 3-to-1 ratio. Now, your ratio can vary, but this is a good rule of thumb for good risk management. But this just goes to show you, it's not about your win ratio. Okay, it's about risk management and profiting. It's about profiting with a good ratio. Okay, it's about profiting with a good ratio. So back to what I was saying. So if you got a 75 pip room, and that means you got a lot size at 20 cents. So say you get in here, you getting in because you got a confirmation that it's going to end up going down. So it went up. Your stop loss is here. As soon as it hits this mark, whether it wicks or just shoots through, you're out to trade if you have it set to be out to trade, right? But this, even if you don't have it set, you want to make sure you want to make sure you getting out because it can keep on going. And trust me, you don't want it to do that. So anyway, for this example, it didn't hit your stop loss. So it constantly keeps going down. And now you just profited. But you risked $10. The whole point is you had space between the entry and the stop loss. See what I mean? So now if you go 25 pips, that means that if you're risking $10 per trade and you have a lot size at 40 cents, you only have room for you only have room for 25 pips. So in this example, it actually, went through your stop loss. Now you out to trade and you lost $10. But if you go with a smaller lot size, you will have more room. If you go 10 cents per pip, you will have even more room than this to pursue what you're trying to do, right? So this is a rule of thumb. This is what I was taught when I first started trading. Every $100 that you have in your account should be 10 cents per pip, which is a 0.01 mini lot size. Okay. If you have 200 in your account, the most you should be trading per pip is 20 cents per pip. and that looks like a 0.02 lot size. Okay, 300 in account shouldn't trade more than 30 cents per pip, which is a 0.03 lot size. Anything that's larger would be over leveraging. Okay, anything over that would be over leveraging. Now, if you got $400 in your account and say you're trading with 20 cents per pip, then that's okay because you're not over leveraging and you have more room between your entry and your stop loss. If you're doing a 3-to-1 ratio and you're really practicing risk management, and when you're really living by that rule, okay, and 200 in your account with the 40 cents per pip lot size, you're over leveraging. Okay, and that's exactly what I did last year. That was the last trade I took last year. I needed to get my mind right. That's why I say, it's a whole technical trading is one thing, but it's a whole another ball game with the psychological part of trading. That's why everybody don't trade. That's why, when you get into trading, you're losing. You lose a trade, boom, you start revenge trading because, you trying to get that money back, or, it can turn into so many things. So, and before you know it, you done blown your account because you was revenge trading. You got emotional and you didn't adjust. So that's why risk management is so important when it comes to trading, because you turn into a gambler at that point. If you're being reckless with your lot sizes, not using the appropriate lot size for the size of your account, you're gonna blow it instantly. I can't tell you how many accounts I've blown. I've blown multiple accounts, and I lost a lot of money because I didn't have my psyche right. Right. And that's why it's books on this particular thing. Like I said, is the technical part is way more simpler than the psychological part. All right. So that's just take notes, pay attention to the rule of thumb. So with that being said, that is all I have. Peace, love, and power. And I'm out.